the Fed is going to realize they've made a terrible policy error. I mean, this will go down, when we look back in history, this will go down as probably one of the three great policy errors in the last 200 years. Long-term interest rates will fall and inflation will fall. So this inflation that we have isn't really inflation. It's just oil prices and used car prices, and those are going away. Those will be gone by the end of this year. And we'll be back to probably 3%-ish type numbers. And then from there, I think we could be back to a zero inflation world, just like Japan is. And Japan's been trying to get inflation for 2 decades, and they failed.
Yeah.
We didn't have a central bank. Years. It's not just in the US. I mean, it's everywhere. Every central bank in the world has decided to try to defend their currencies, except the Japanese and the Europeans. We have companies that are down 90, 95, 98%, and everybody's short. And if those things have to get covered, you go from 2.5 cents on the dollar to 5 cents on the dollar in a hurry. Now you're still down 95%. From a year ago, but you could have a really material rally. The problem is those are bear market rallies, right? There's never been a 4% up day in a bull market.
Yeah.
And it makes sense, right? A bull market is a market that goes up most days, but goes down sharply on bad news or perceived bad news. Okay? A bull market is a market that goes up most days and goes down sharply on bad news or perceived bad news. So what we had is a market that goes down most days since last November. I think crypto winter ended on June 13th. I think we're in crypto spring, which will last through first quarter next year.
Okay.
And what does that mean? Right? Well, crypto winter is where you go down a lot, right? We went down, 70-something% peak to trough. Bitcoin is the cheapest it's been other than 3% of the time, right? In only 3% of 14 years has Bitcoin been cheaper relative to its history. So that's why people are so unhappy. Now the markets, on the other hand, the equity markets, are still, despite being down 21% year to date, they're still in the 93rd percentile expensive. Stocks could fall 50+% just to get back to fair value. If you look at the history, 14 years of history, Bitcoin is 0.0 correlated to bonds and 0.15 correlated to stocks, meaning the directionality of one has nothing to do with the other. 0.15 is a really, really low correlation. November to than stocks. Why? Because it's uncorrelated over the long term. But in those short windows of liquidation, where the leverage was coming out of the system, people have to sell what they can sell, not what they want to sell. Sure, and that's why bonds did so poorly. I mean, that and rising interest rates. It's why gold has done so poorly. Everybody says gold's supposed to do well in a recession. Banks borrow from each other at Fed funds, and then they invest in the treasury market and arb the spread. That's harder to do today because you got an inverted yield curve, which portends recession. So I think they're closing in on that neutral place where then they're going to have to cut. Well, again, what does cutting do? It isn't going to change demand for credit. You and I don't get to borrow at Fed funds. The average person doesn't borrow at Fed funds. We've become addicted to free money from the Fed.
Sure.
As a culture, as a society, like California's sending out checks. Think of the illogic of this. They're sending out money to people to combat inflation, which was caused by sending too much money right after the lockdown. We printed too much money. It caused the inflation. It caused oil prices and used car prices to rise. And now we're sending people more money, trying to combat inflation. You're creating inflation, trying to combat inflation. It doesn't make any sense.
The Fed has made an absolute big error here. How does this get fixed to sustain the U.S. economy over the next 5-10 years, which are typically the cycles that we have seen in the past? 7 to 10 years, you get those cycles in. This past one a little different, obviously with the pandemic and scenarios playing into this.
The economy is going to be just fine, right? The economy is incredibly resilient. We have tons of innovation. Recessions are amazing times for new company formation. People get laid off. They don't have a choice. They have to get entrepreneurial. Some of the best companies, JetBlue Airlines was created in 2001 at the trough of the recession. Splunk was created at the trough of, I think, pale, stale male white guys sitting in a room dictating rates in crypto. It's driven by markets. And so the economy will recover. The cure for, overly ebullient economies is a recession. The cure for a recession is a recovery. So that's exactly, I'm not worried about that at all. I'm worried about equity markets. I'm not worried about crypto at all. Why? Well, because the innovation in crypto is extraordinary. The valuations in crypto are super cheap, right? We're at the tail end of the bear market, not the beginning. And maybe we're halfway through the bear market in equities. Maybe we're 80%. Maybe the Fed will pivot and we'll get that face melter. And, I'll look silly for being cautious. But short of the Fed actually cutting rates, the economy is going to be unstable and earnings are going to stink. If I put my money in a bank, I get paid 1%, 1.5% interest. If I take that fiat, convert it to a stable coin, deposit it at BlockFi, I make 6%. 6 is better than 1.5 or 2. But why don't more people do that? Well, because the regulators are trying to say that it's legal. That's a security. Like the bank deposit is security on no planet. So it's an interesting dilemma that innovators don't care. They don't think about the incumbents. I'm worried about equity markets. I'm not worried about crypto at all. Why? Well, because the innovation in crypto is extraordinary. The valuations in crypto are super cheap, right? We're at the tail end of the bear market, not the beginning. And maybe we're halfway through the bear market in equities. Maybe we're 80%. Maybe the Fed will pivot and we'll get that face melter. And, I'll look silly for being cautious. But short of the Fed actually cutting rates, the economy is going to be unstable and Bitcoin and other assets allow people to opt out of the fiat fiasco. What's the fiat fiasco? Every single day, everywhere in the world, central bankers steal our wealth through this thing called inflation.
Yep.
Under the guise of it being good for us, right? The 2% inflation is good for you. The price of Bitcoin in bolivars has never gone down.
Sure.
It only goes up. Same thing in Turkish lira, Argentinian pesos. The problem is we, Americans, only look at Bitcoin in dollars. And there is fluctuation in price because the dollar can be manipulated, and because markets, traders, speculators, gamblers were allowed to borrow and buy the asset. That caused speculation in the price. And then we have futures markets, and the futures market allow prices to be manipulated. That's why gold has been so troubling over the last 10 years. It should be much higher. Gold should be much higher. But JP Morgan and all the big banks can sell futures, right, out of thin air. They can create a bar of gold out of thin air in the futures market and sell it. And it's not a coincidence, Paul, that the bear market in Bitcoin started in November when they approved Bitcoin futures ETF.
Yep.
Long-term interest rates will fall and inflation will fall. So this inflation that we have isn't really inflation. It's just oil prices and used car prices, and those are going away. Those will be gone by the end of this year. And we'll be back to probably 3%-ish type numbers. And then from there, I think we could be back to a zero inflation world, just like Japan is. And Japan's been trying to get inflation for 2 decades, and they failed. Deflation is caused by the killer Ds. Okay? Demographics, bad demographics, too many old people, too much debt. Debt is deflationary, not inflationary. And we have massive debt everywhere in the world. And
Democrats.
And that leads to deflation. So the killer Ds are demographics, debt, and deflation.
Yeah.
And I think that's where we're headed. So this short-term blip in CPI, because we measure funny, oil prices, used car prices, and the irrational response of governments around the world to lock people in their apartments, okay, that I don't think is coming back.